Hi, welcome to the Market Alert for Monday, the 11th of April 2022. So bonds and stocks battered as hawkish Fed flexes and Europe panics. Stagflation, yep, I'm thinking it's back is the subhead there. Yeah, absolutely. And moving on to the banks, JP Morgan warns of imminent acute agricultural supply shock and how to trade it. So it's just long all of the grains and softs, etc. Atlas slugged. One bank turns apocalyptic with inflation shock worse, rate shock starting, and recession shock on deck. Not only does Bank of America see a big slowdown coming, but warns that social instability emerging market is now inevitable. Yeah, when you have food shortages, absolutely. Global food prices explode higher in March as Ukraine supply shock strikes. Inflation riots already beginning. The world is careening towards a food crisis. I've warned about this for the last couple of years and taken measures to make sure that we have sufficient in. I don't mean greedy, but it looks like we're going to be heading towards some sort of rationing by the time we get to autumn. And palladium, platinum soar after London market blocks Russian products. They need to do that with silver as well, actually. That might just get the price to break above 30. Another day, another Russian ban, another surge in commodity prices. I'm not going to go into why sanctions won't work. I've already done that last week, and there's a wonderful MEP talking about this as well during, I think it was during Friday's European session, which is well worth watching. I'll put a link in the description. And then finally, daily briefing, the US dollar continues to show strength. The index hit 100 for the first time in 2 years on Friday, surging on the prospect of a more aggressive monetary tightening cycle on top of the current one. So let's have a look, see what news we got this week. We got CPI this week, I think. Nothing today, but CPI is out tomorrow for the US. That's the one we want to have a look at, and Brainard's out as well. We've got CPI for the UK on Wednesday there as well. A lot of inflation type news this week. What else have we got? Let's have a look. Yeah, we could see a rate increase this week as well for the UK. ECB as well, refinancing rates for Europe as well. And yeah, nothing major, no FOMC. Just a member speaking there on Thursday. And then, of course, we're going into Easter weekend, of course, noticing their bank holiday, Good Friday, this week as well. And finally, the gold-silver ratio sitting at 76, way too high. The average during its lifetime is 15, so you can see how, again, there is so much suppression of the silver price. All right, let's have a look at the markets. Friday, the Dow was up, and overnight it's back down. So one day up and resuming back to the downside. So we've got to be careful here because this market's starting to look weak. We've gone through the 38 already, sitting at the 50% retracement. 62 there. We got a double confluence there of fibs at 78%. And yeah, let me just move this one out so we can see what it is. So we've got a 38 from here back to here with a 78 as well from here back to here as well. So on the downside, watch this area here, 34,355 or 34,350 would be the area. Watch the 50 EMA as well. Usually tends to be quite good support. Already through the 20 and through the 5 now as well. So weakness showing there in the overnight for the Dow, and you can see this. It's moved all the way down. Watch the low. The low, very important, as you can see a big rebound off this low on Friday. So watch this low in the Dow if prices do go down and retest it. Currently overbought, so we could see a bounce when the futures kick off at 7 a.m. In the DAX daily chart, again, we saw that Friday the DAX struggled to move to the upside Very difficult there at the moment, not making much progress, banging its head against the 20 bar moving average. Markets reversed overnight, and from this low to here, this is the fibs. Let me just get rid of a few here. We're already down to 62. Let me just expand this out so you can see, and also move these out. So we've got the market sitting just below 62, 78, 89, and then we've got these two lows that we looked at in Friday's alert, very important lows as well. So if we go to the 30-minute chart and have a look, we've got the low here, and if we just drag the chart across, you will see the two lows that we mentioned on Friday. So we got the Thursday low, the Friday low, or Wednesday low, Thursday low, and now we've got the Friday low, which is here. Let me just check this. It seems to be slightly obscured there. Let me just grab the 30-minute chart. That is the 30-minute chart, and it's the daily chart I'm after. It's here somewhere. There we go. Yes, we're already tested the low, haven't we? Yeah, that makes sense now. Sometimes on a Sunday, because of the midnight, some brokerage firms cut off at midnight and then start again. So they go from 11 till 12, have an hour's break, and then start again. So yeah, I can see that there now. It says the low. So yeah, we've been through Friday's low, and the moment the market's trying to find some support here and launch itself off. So I suspect the futures market will do this, and then it will be retested in the cash market. Friday's trading, say it was very quiet on Friday, but a lot of weakness for the DAX. After putting in a serious up move in the futures, the cash market managed to maintain this up to Thursday's high, and then we were overbought, and then the market came down. We went to oversold, all of the criteria there back to oversold with divergence, and then back we have an 89% retracement there, or double bottom. Actually, that's a double bottom more or less. Let me just measure that one. I would say that it's 89 myself. Yeah, 89 to 90% retracement. Market then up once more. Again, overbought, and the market then down until the Dow opened, and then we see the market retested at the DP with divergence there. This little green one, there we go, and then the buying coming in. So up, back, and off we go. We already had this in a smaller time frame before the Dow opened, but the Dow did come down and break the DP before moving to the upside there. In the currencies, you can see that the yen continuing to move up, heading for 62 now. Like I said last week, the Bank of Japan failed to force the yen down and is now moving back up in the daily chart. In the 30-minute chart, you can see this has happened overnight, again coming off the low. Every single chart you look at, the low will be very important, as will the previous day's high. Particularly if the market is a bull market, then the low will try and remain intact as much as possible. And again, we're seeing this situation here where the previous day's low is tested, 200 MA, oversold, demand, crossover, parabolic changes, moves to the upside. And there you can see gapping below the previous day's low, which is Friday's low, before moving higher. The pound is sideways to lower. Watch Friday's low on this one as well. It's been breaking the previous day's lows. So this low here is very important at 129.82. At the moment we're oversold, having a bit of a rally back towards the DP, the 5 and the 50 EMA as well. So if we become overbought at this level, then be looking for a short back down towards the lows. And the reason I say that is if we go to the dollar, we'll start off with the daily chart. So you can see, as the headline said, we've got through 100, we've got 115.5. Market needs to go above this. Where are we going with the US dollar? Well, here's the all-time high. We looked at this last week. We do have a triple top, I think, in this market. No. Well, not of late anyway. I was just a bit higher there. You can see There we go. So it took out this double top and then created a new double top at 103.8, and the market currently trading back. This is the monthly chart. Love these time frames because you can see exactly where the market's heading and what it's doing. So here are your targets to the upside for the US dollar. 103 is on the cards. Anything to put pressure on the metals, keep them subdued because they are inversely related. And of course, with further interest rate rises coming, that's bullish for the currency as well. Silver sideways to higher. I'm amazed that they're allowing this to actually move to the upside. It is moving up, but it's only creeping up. You'll see that we're at 89% retracement from here down to here. I'm just going to remove this one because there's another one here from here down to here as well, 89%. So this is why silver is struggling in this area at the moment, because it's about to, or it's attempting to make a double top here and here. Be good if we can get back to this sort of level, but we're above the lows at the moment of that 89 retracement that we have there, and we were oversold. So we can continue to move to the upside, hopefully, but we'll see. In fact, 30-minute chart of silver is here. You can see we're just bouncing off the DP there, having put in a double bottom here. Didn't quite get back to the DP, but attempting to move higher again. Notice how when the market went through Friday's high, it was immediately brought back as well. A lot of support in this area to the left, which also ties in with the DP as well. So the 2464 area, very important. Watch out for this one with the LBMA fix when they tend to slam the market. Meanwhile, in gold, sideways as well. We've got a double or triple top at the moment in these prices. Market struggling here, needs to remain above the averages in order to move higher, but sideways for this metal at the moment at the top of the channel. And finally for this morning, crude oil stuck in a sideways range, oversold in the daily chart at the moment below the 50 MA there as well. Needs to hold at this level, otherwise we go back below $100, where we're currently holding at that psychological level at the moment. Okay, that's it for Mondays. Let's see what the week brings. Like I say, it's CPI week this week, and then we go into a short trading week with Good Friday looming. So a 4-day week this week, which would be most welcome. Okay, that's it. As ever, thanks for watching. See you in the next one.